Hey everybody, Cowboy here, and looks like I was not able to get live by 6:20 like I had hoped. Apologies. You know what? Sometimes mornings just kind of get out of control. It's almost better that I didn't because markets kind of went wild. Now the Nasdaq, when the PPI got announced, I don't see a big difference there on the higher time frame at all. You do get a little bit of a pop up. I mean, just a hair of a pop up here. So the news was evidently a little bit bullish for the NASDAQ. Give me a second here. So I deal with a little allergies here. But what I will look at here, where this matters, is first of all, let's take a glance at Bitcoin. Yet not a lot going on. The news did not affect Bitcoin much. Let's take a look at the actual PPI data. I'm getting a feeling it was just not much of an event. Yeah, it was a cool print. This is actually relatively cool. If you look above my head right there, those two zeros, that's the PPI data. And that's, there apparently on the production side of things, there was no increase. And in fact, there was disinflation. There was no inflation at all. Not even disinflation. There was just none. So same price last month on the production side as this month. And that is a dollar week signal, which means markets should be running up a bit. But Bitcoin is actually just kind of hanging out and going down. Interestingly enough, this was below expectation, but Bitcoin's not really reacting. I did predict to Algo Factory it would pop out of this consolidation last night. Pop up it did, but I thought it wouldn't come out for a couple of days, and it came out last night. Bitcoin's gonna go wherever it's gonna go in a hurry. Nasdaq here on the 30-minute though, it's just heading up. I think Nasdaq does still have a lot of upward pressure. My prediction from the weekly forecast that I put out last night does have Nasdaq being bullish. Here's a low time frame look. Not a lot of action from the PPI, but we did see some action in the forex markets. So that's where we're looking at it. Now these arrows I drew were for a private look that I drew this morning in the live lab. And so far, it seems to be following this. And I do think the JPY is going to continue in this direction. Now, this again is a dollar strong bit of news. And so it was already heading down after a massive move up yesterday, off of which I profited very handsomely, right? But in this case, and again, we're on the 5-minute chart here. I do believe this will bounce right here at 148.50 or possibly down at 148.15 and then head back up. This move down is going to happen, but I think it'll happen over the next few hours and then head back up later for USD JPY. So again, Nasdaq is just kind of holding where it is. Not a lot going on. I think Nasdaq might be hanging back because we're in earnings season, right? Bitcoin itself not doing a whole lot. There was a bit of a shakeup on the low time frame, but Bitcoin's really pretty quiet right now. It's really just, I think, maybe has eyes on Nasdaq, or it's just moved so much in the last few days that it's not doing anything. Whatever the case might be, there's just not a lot of volatility in Bitcoin at this moment, right? So if I were to back out here, I do, yeah, it's just spent a lot of the last several hours moving up, and it's broken above this kind of local consolidation area. You could extend this a little bit because you have some highs back in this area behind here. So it's not the cleanest look, but I do expect this to eventually head up. So if I were to redo this prediction that I gave privately last night, I would say there's a decent chance it kind of grinds up a little slowly until it doesn't, and then starts to head up. And it might take longer or shorter than what I'm drawing right now. Okay. So, but that's what I expect on Bitcoin. NASDAQ itself, let me take a quick look at the algos here. I do expect it, just based on the little I'm seeing here, I think it's going to grind slowly up. It wants to head up. It did need to reset on the daily, but that reset is just starting to look like a slow grind up sideways. And of course, the NASDAQ has the benefit of 401ks and all kinds of money going into a lot of the stocks that comprise the NASDAQ or the ETF itself. So, we're looking at probably just a grind up, slow grind up. And we are in earnings week, so earnings season is a little bit unpredictable. I probably would caution against extreme predictions, or let's just say I would caution against high conviction predictions until earnings season is over. But if I were just to look at the algos, I'd say we're just going to get a grind up until it pops up. Now, eventually these things do pull back, but right now I expect bullishness on the NASDAQ. That's just what I see. Back to USD JPY. Again, I predicted this morning. It's happening as we speak. So I predicted this about, I don't know, 45 minutes to an hour ago, happening as we speak. So this will come down, and I think it will pop up. And the lowest it probably would go, I don't think it'll go this low, but it could drop down to about 147.93. Either way, I'll be looking for a long on this because in the end, USD JPY is long. And I think even if it takes a little bit longer to do this, I'm definitely making more money these days trading on the trend. So I like to stick with the bigger trend. I might scalp some shorts out of this if I see certain things happen in the charts. Now, the euro, a little more interested in shorting that because the trend is this move down, this rollover in the euro is extending. This is a very bearish look right here. Lower highs, lower lows, and then a hard bump down. Plus, the algos are showing me some real bearishness right now. So we might be seeing the euro finally roll over after months and months of just heading up. It's been heading up since the beginning of the year, and it's been heading up in a way that is a bit unnatural based on what's going on. The euro has been cutting their rates. You would think that their currency would be less attractive, right? And yet the euro continues to rise against the dollar, as did everything else. Even in that same period of time, the Aussie did the same thing in a much weaker way, with some surprises. So against the dollar, you'll see this, the USD CHF is doing the same thing, where the dollar was falling against the Swissy, but now starting to hook back up. So what we might be seeing if we look at the DXY is dollar strength starting to return. So the DXY is the dollar compared to a lot of major currencies. I believe primarily the euro, or at least the euro has the biggest chunk of that basket of currencies, but also the Japanese yen, Swiss franc. I believe the loonie, Aussie dollar, New Zealander, the Kiwi, all that I think is lumped in there in some percentage, and the dollar is in the short term coming back. But we must look at the longer term look here. And this was a very big move down. And this is a big move down in the dollar in an era when the dollar is not cutting rates. The Fed has not been cutting rates. They've been holding them steady. And in the current environment, even a small percentage of a rate cut, it makes a big difference because of the amount of debt out there. All these other currencies are cutting their rates with some exception, and yet the dollar's going down. Now, there are some explanations going out to the bond market, the euro dollar system, SOFR curve. There's a lot of explanations in the bond market as to why that is. And all of those, from what I'm able to surmise, and I'm not a bond market expert, but I know a little bit, from what I'm able to surmise, the dollar is going to come back. Now, it might go down before it does, but at some point, the dollar probably will become a lot more popular than it is as the rest of the world drains its liquidity to try to keep things together. Let's take a brief look at gold. Okay, so gold, I don't expect a lot out of. If you watched the weekly update that I did yesterday, I do those. Well, I was doing them Sunday. I moved it to Monday because we keep getting Monday surprises. So the plan would be to do the weekly update once the market opens on Monday. I've had my trading day. I don't usually trade too heavily on Mondays because Mondays are shady, but they're not as predictable. But I expect not a lot out of gold. I expect sideways action. Now, gold has the capability to break up at any time, especially due to geopolitical issues, right? War, things like that. But even through the Iran situation, gold held steady. Well, look what it's done. It's done nothing but go up, like going back to 2023. And October 7th, 2023 is the day that it started going up. So it's now hanging out where it is. It spent years not doing anything, and now it might spend months not doing anything. We're going to see about that. Silver did make a nice move up, and I've obviously looked at this pretty extensively, all my drawings on here. But in the end, I think as I delete all that, I think silver, take a look at the algos here. Gold and silver are almost always high time frame long, as is Bitcoin. Bitcoin's almost always going to be high time frame bullish. Looking out to the 1 month and 6 month. But right now on the daily, there needs to be some kind of a reset. And then once that reset occurs, we'll probably end up seeing another push up on silver. Silver did try right now. Let's look at the 3-hour chart here. So silver made its way up almost to 40, right? And that's a big move for silver, but I think this most recent pop-up attempt caused it to, it's probably going to head down and grab some liquidity right here. So let's draw a box here. Anywhere between 37 and say 35.30. I think silver's going to drop to that area. Now, once it does, it probably will go sideways and then maybe try to reclaim 40. But the move up that it made is, considering how silver works and the plumbing to silver, this move from say 30 to 40 was a big deal. It didn't quite make 40, but that move was a very important move. A lot of what happens to silver is going to depend on what's allowed to happen to silver, right? They've been trying to, I mean, the word is silver has been held down artificially for a long time. Okay. So that being said, good day, Robert. That being said, you can only hold something down for so long when the financial situation is unraveling, and the financial situation around the world is very slowly unraveling, right? It's so far has been controlled, but I can tell you that the bond market, it's just a matter of time. It's a matter of time before the debt starts to, I mean, it's already spiraling out of control. It's just happening so slowly that they're able to still make sense of it. But there will become a point where the debt situation is such that, you know, markets are going to go a little bit haywire. And I mean, markets are just going up now. If I go to NASDAQ and you just look at the trend, I mean, it does nothing but go up. And this is not, look at this. This is a debt bubble. Okay. I'm going back to like 2010. I mean, look, the fall that happened, the dump, the tech boom or the tech bust in NASDAQ. Let's go to the Dow for that, because NASDAQ's a little new. So if we look at the Dow, you had the 2008 fall, the great financial crisis, right? And price fell 54%. So we lost half of the wealth in the Dow. Well, price fell the same number of points, probably not the same percentage in COVID. It did it very quickly. It was COVID, but that was 40%. And then price just took a nice dump on the temper tantrum, probably close to 30%, maybe 25. Let's see. 20%. That's significant. That's like, as far as I know, it's like trillions of dollars. Now, can the market continue to maintain this upward pace? There is word out there that liquidity is becoming even more inelastic. You know, how much more money can there be printed? How much more debt can we continue to rely on? And it's a trap. You actually need the debt to keep things going. It's a Chinese finger trap. It's just the way things are. It's the way they've always been. There's a really good book by Ray Dalio that explains this. Why Dalio? And I really recommend you read this, because a lot of people who talk like I talk, and, you know, things are looking long-term crazy, and, you know, they, whatever, like, oh, you're a doomer and markets are going to be fine forever. And well, this book called The Changing World Order, Principles for Dealing with the Changing World Order. It's by Ray Dalio, very respected, you know, longtime CEO of major financial companies. You know, it's sinful that I can't remember exactly which ones. I want to say it's JPM or, you know, Goldman, one of the big names out there. Ray Dalio has been around forever. He's, you know, one of the biggest names in finance. So read this book. It's just a debt spiral. Now, in the meantime, I think we have years, not decades, but a few years of prices going up and a lot of advantage to be taken in these markets, right? We got some comments here. Greetings, Johanzo. Yeah, Ray Dalio is all over the place. I'm just, for some reason, I'm blanking on which companies Bridgewater. I think he started Bridgewater. Understand that these cycles happen. There's a major cycle every 100 years. And guess what happened 100 years ago? And everything cracked up before it fell, right? So if you look at 1929 stock market, it kept going up and just going up and going up. And everybody thought it was going to continue. And that's when things happen. Well, understand that this most recent move in the stock market has been retail. Like, this has been a retail move. What does that mean? Okay, it's the last thing I'll leave you with, and I'm going to go to the private live lab. There are two types of investors and traders, right? There's retail, which is everybody probably watching this. There probably are not too many people watching this who are not retail. And retail is like people trading their own money. You have a little bit of savings, you put it in the market, you're betting on this company or that company. That's retail, right? Now there's also institutional money. Now the strict definition of institutional money, as far as I know, is somebody managing money professionally for somebody else. So if you're managing other people's money, then that's technically institutional. And usually you're talking, 8, 9, 10 figures, whatever the number is, right? Millions and millions of dollars. So this move up, this big move up, and I think it's mostly been since the tariff tantrum, but maybe even before, massively retail. Now the smart money, that's institutional money. Okay. Institutional money knows what's going on. And they'll have to, they'll still have to play this game. But when it comes to your quote unquote spot or even lower leveraged or base contracts, they're not going to continue to buy the top. They're going to look for price to come back down before they participate. Now, retail, sure, it's a sizable force. Don't get me wrong, but you're never going to have the kind of force that institutional money has. Institutional money has the capability to tell news agencies what to say. I mean, it goes beyond the sheer factor, the blunt force of money. They actually control the game. So understand that price needs to go back down for retail to be interested. Either that or price has to really, really, really go back up. And I don't expect it. And I'm not saying price is going to go down here, right? Price could easily just continue up to like, Dow 50,000 or whatever it is. What I'm drawing here is just a conversation piece. This could easily happen just like this. But at some point, there needs to be a pullback. There was a pullback here, right? But the word is a lot of this move up was not institutional. It looks like they want a deeper pullback. We'll see. So I'll try to get some more information on that, institutional flows, consult some quants. Maybe I'll come back with a little more data on that. But for now, I'm going to head over to the private live lab. So thank you all for watching. Go to the link in the description. Get a free algo. Put in your name. It doesn't have to be real name, fake name. We don't care. Put it in an email, and we'll send you immediately an algo, like the next screen. As soon as you hit submit, you'll get an algo. It's a video, teaches you how to build it. You don't have to know how to code. It's just a basic trading algo. We'll send you weekly updates for the market. We'll also let you know when we're going to have our workshops and stuff like that. The first workshop is going to be free. And then the ones after that will be paid. So keep your eye on those emails for the workshops. Thanks for watching, and we will see you next time. Also, do not forget,
join us or die.
Just kidding. You're not going to die. We're just having some fun, and we'll catch you tomorrow, 8:30 a.m.